Steve Peterson here. Welcome to our channel where we talk all things commercial investment real estate. And in today's video, we're talking about what to look out for when purchasing property, commercial investment property in 2023. And there's a few different things. Now, let me just say this. I do think that 2023 is going to be a buyer's market. At least what I mean by that, and I say that, we'll take it with a grain of salt. I mean that the buyer will have more negotiating leverage than the sellers in general, right? As we compare it to the last couple of years where really the sellers have had all the negotiating leverage until about to about third quarter of last year, 2022. Now, interest rates are a little bit higher, so the cost of doing business is up, but you can offset that through negotiating and making sure you make your money going in on the deal. All right, so the number one thing to consider when you're buying properties this year in 2023 is you make your money when you buy. All right, I learned this principle when I first got into real estate. I ordered this course, and many of you, if you're an old school, old timer, you would know this video. So some of y'all youngsters, young guns out there might not know about the Carlton Sheets No Money Down system, right? The Carlton Sheets No Money Down system was a great program, and what he talked about that is, hey, you make your money when you buy, right? Meaning that when you acquire the property, that is the best possible time to structure it to make money. Meaning that when you go into the deal, you want to be positive cash flow. All right. If it's like a rehab or something, you need to make sure that once the rehab done, it's a positive cash flow. There's positive equity. There's upside day one going into the deal. All right. So how do you figure that out? Number one, you do a thorough investment analysis to make sure that the property is positive cash flowing day one at the percentage that is going to meet your investment criteria. We've got other videos about developing investment criteria and investment plan. Even if you're buying a property that's totally vacant and you need to renovate it, so obviously there's not cash flow day one, but the economics are such that, hey, if I buy this property at X, we put Y into the renovations, okay? And when it's stabilized, the rents are going to be profitable, right? Based on reality, and then it can make a good deal, right? And therefore, you got to negotiate that going in. You got to make sure you negotiate. In the last few years, people just been buying stuff, overbidding, all this. Now you can negotiate. Now, what that doesn't mean is that don't squeeze the life out of the deal. I just had a buyer, all cash. He got the buyer. The seller was down already $300,000 on his price. We entered into the price, and he's trying to nickel and dime over $30,000. Ended up not getting the deal, and then another buyer came along and we went with him. It was a sweet deal, but he tried to squeeze the life out of it, right? And it was just too much for the seller. And then while he was trying to squeeze, another buyer came along. We got out of contract with that guy and on to the next one. So don't try to squeeze the lifeblood out of a deal, but make sure the first thing is you make your money going in. All right, so make sure you determine that when you go in. Number two is to budget in uncertainty, meaning that if you're looking at the market and you see 5% vacancy, maybe you budget for 8% vacancy. If you look at your utility costs and whatever the existing profit and loss says, you might want to put 10, 15% increase on that. You want to budget for uncertainty because we're in uncertain times, man. The way you deal with that is you budget for it. Don't sit on the sideline and say, I don't know what's going to happen, so I don't know. What you do is you budget that into your deal and you price that into the deal and you negotiate accordingly. If the seller doesn't want to work, hey, he doesn't want to work. Hey, you don't got to do what you got to do. But if you price a little bit of uncertainty, and you don't have a magic ball, you can't look in to see everything, but you can price uncertainty into deals and apply a discount to the deal that you're working on to be able to offset for that. Very, very important. All right, very, very important. And the last thing I want to say is understand your financing. Understand your financing. Especially in commercial, okay? Everybody keeps saying we're going to buy at this rate and we're going to refinance next year and make some money. Well, in commercial loans, even residential loans, there's typically a thing they call a prepayment penalty. Now, in bigger commercial loans, especially multifamily loans, especially if it's a FHA, HUD, or Freddie Mac loan, they have these things called yield maintenance, which all yield maintenance means is it's an onerous, draconian prepayment penalty. So you're not going to be able to refinance next year without paying off that yield maintenance, which can be very, very hefty. All right. So understand your financing. Yes, you may be able to refinance. Yes, that may be a good strategy. But if you're stuck with yield maintenance and you got 6.5%, rates are now 5, and you're like, hey, I'm gonna go ahead and get this 5.5%, but you gotta pay basically 10% of the loan amount in yield maintenance. All right, that was a bad move. All right. Now, part of understanding your financing is also understanding what can you do creatively around that. A lot of times you might be able to get a loan where you can get the seller to carry financing behind that first loan, which is happening all day of the week right now, by the way. So you need to understand the terms of the financing, the covenants. A lot of loans will not allow you to have a seller to carry behind you. So you need to know the terms of your loan, all right? 6.5% interest rate, that ain't the end of the world, man. People in the 70s was doing deals at 18, 19, 20%. In fact, making money, a bunch of money on that. Understand your finances, is what I say. So if you're buying in 2023, there's 3 things you got to do. Make your money going in, like what we said. All right, don't wait for some magic event to happen. You make your money going into the deal. Day one. You know what I'm saying? And that's a principle, I think, that does not change whether you're in 2023, 2022, but it got lost. It got lost in the sauce because people were buying and just expecting everything to go up, right? So now we back to reality, which we always should have been at anyway. Make your money going in. I can't emphasize that more enough, especially in this year. As we've seen foreclosures ticking up, we know there's going to be some opportunities. But don't just think that, hey, you can structure all this stuff for the future. You got to make some money going in to the deal, all right? That's principle number one. The next, and I'm kind of skipping around, but then you really need to understand your financing. Know what you're dealing with from the gate. Understand your financing, right? And don't try to squeeze. I was talking about making your money in the deal. Don't try to squeeze the bank. Don't try to squeeze the seller. Be fair. Obviously, get the best possible deal you can. But don't miss out on the deal because you're trying to squeeze the penny, the lifeblood out of it. Understand what's going on. Understand what's up. Understand that you can make money in a market like this going in, but that you're not trying to just take the lifeblood out of the deal. So you gotta make your money going in. You gotta make sure you understand your financing like the back of your hand, and you have to price in uncertainty. And that was actually my second point. I mixed them around a little bit, but there's uncertainty in the marketplace. Don't sit on it. This might be the best buying opportunity you've seen in a long time. Don't sit on the sidelines because of uncertainty. Price the uncertainty into the deal. Whatever your price, whatever your rate, whatever, apply it to the deal and negotiate accordingly. If you get a deal, fantastic. If not, it is. But don't sit on the sidelines because of uncertainty. Price the uncertainty into the deal. So I hope this helps, man. Let's stay tapped in. Let's keep getting good. Let's keep, being engaged in this market. And like I said, I think it's going to be a lot of money being made this year, but you got to do it the right way. I hope this helps. If it does, like, subscribe, share with friends. And to the next video, deuces.